This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Tamim Abdul Majid of OCA Ventures. Tamim, thank you for joining us.
Thanks for having me. Glad to be here.
Glad to have you back, and just wanted to recap a little bit about how you got into early stage investing and a little bit about OCA Ventures, and then we'll kick into today's discussion, which is blockchain investments by VCs. What are they investing in, and where are we with that today? But maybe you can just recap a little bit about your background and your fund.
For sure. So, we are OCA Ventures, and OCA Ventures, our roots are in the fintech world. OCA stands for O'Connor and Associates, which was an options trading prop shop that is now a part of UBS. And so once the organization merged into UBS, there was the partners of the original organization that decided to invest their money into alternatives, and that's what led to the birth of this fund. And we're 3 funds in, and we invest in fintech, but we've also become over the years a more institutional play, not so much just an O'Connor vehicle, but participation from other institutions in high net worth. We invest when check sizes as small as $250 up to about $2 million. And our vertical coverage has expanded from more of the fintech focus into general software investments, whether it's enterprise or consumer plays. We certainly emphasize our fintech roots. We also have good expertise in the healthcare IT space, but our portfolio spans all kinds of hits, including consumer companies like Spot Hero, which does parking for large metropolitan areas, getting you discounted parking. Tenor, which was a gift sharing app that we sold to Google, as well as total other end of the spectrum, CleverSafe, which IBM bought, which did cloud storage, object storage in the cloud, one of the pioneers of that technology. So kind of shows the breadth of that. But then at the same time, we do fintech plays. We were one of the earliest money in Trade King, which sold to Ally Bank, which is one of the larger e-brokerages. We have an investment called Sumridge, which does principal light bond trading that just got recapped by a private equity firm. So spanning a full breadth of a lot of different software plays. And we look for good opportunities. And given the fact that we like software and tech, and the fact that there is a fintech expertise in the partnership, we certainly like to look at investments in the blockchain crypto world, if you will, and deconstructing some of that is part of what we're doing today, because there's a lot of blurring of lines in that space. So we are certainly very watchful of it. We, to this date, have not announced or made a specific investment, but we are very interested and certainly looking at many on a regular basis. And there's certain parameters that we're ultimately seeking, but right now it's a little, I don't want to say early because that's not the right word. It just hasn't been that the right opportunity that we are looking for has come across, because the way we look at it for ourselves is we have strong capital markets expertise. We can certainly help provide insight on the technological front. And so the question is, if you have the right team who is approaching a problem in this world where there is a capital markets related benefit that they are seeking that we can help with, tied to a technology caliber that makes sense in the rather exploding ecosystem, if you will, at the time, with a lot of development happening all across the board, that's really that right fit that we're looking for. And we're keeping an eye open for that.
So last year, many companies raised substantial money with nothing but a white paper and a great idea. And in some cases, those were security raises. In other cases, those were utility token raises with no security metrics attached. Well, this year, the SEC has basically said it's all securities, and so we're doing true full-up security raises. But the question now is, what level of technical work has to be done before you'll consider that to be a substantial platform that you would get behind? I'm sure it's more than a white paper, but how much development has to be there before you say, yeah, you guys are well on your way to getting that to the market?
Sure. Well, there's quite a bit in there, and let me kind of deconstruct some of that, right? So when I think of the whole blockchain crypto space, and I should say when I look at the blockchain space, really, right, that itself is in my view, a far wider scope of implementations that you can think of. ICO financing being one of many ways to approach how you finance a blockchain startup. You can go traditional venture capital route. You could fund it yourself. You can, of course, go friends and family, et cetera, angel investing. All the prior routes are also available to you. It's a question of, do you choose to pursue that or not? Now, when you look at ICOs, that, in many ways, it's kind of experienced that frenzy of the Wild West, similar to how the dot-com bubble exploded when people really didn't know what was going on back in the late 90s, early 2000 timeframe. And so things were just going nuts. And there was a lot of investment happening on undefined parameters. And in that same way, the ICO bubble, per se, enjoyed that because it became a new way to finance companies. And the utility versus the security aspect of it was less meaningful at the time because it was a budding market. And of course, as most regulation in history gets written, there has to be some kind of a threat that comes across that leads to that change. And now the SEC is stepping in and saying we have to treat it like a security. If you're going to do a raise and tokens go from utilization tokens to actual equity tokens, then that becomes an important shift in the landscape. The fact is that it's almost like it transformed, right? Like you had a Kickstarter-like model of utility tokens where you're getting to pay money in to get the utilization of whatever it is that you're paying into, then moving that into a more security offering just because of the sheer volume and amount of money, along with the empowerment of the Jobs Act, all coming into place. So it was kind of a good alignment of events leading to this shift. So what I want to say is that route, for those who want to look into that route of financing, we as a fund can be supportive of that in itself because there's still, if you have a decent enough platform with a strong enough team, you could still go get away with an ICO. And if the right ICO opportunity presents itself and we as a venture fund is giving kind of the pre-support dollars for that ICO, because you still need to have some money to do that, that would be something we'd consider. We'd be very, very cautious. We'd really want to make sure that it would be successful. They'd be able to raise the kind of money because things are tapering down. But from that perspective, it can be a little earlier because then we're really learning the ICO space or the market and making an investment in that way. If, on the other hand, we're talking about an actual blockchain-related investment that is a company targeting a problem, whether that's title insurance management, real estate, banking, foreign exchange transfers, and they're using blockchain as a kind of solution to that. And it doesn't have to be necessarily a public blockchain. It could be a private one. And they have other implementations that they're looking into to solve a problem using a distributed ledger as kind of the core foundation for it. Then the parameters for that really start to change more into what we would look at as a traditional venture investment. We are looking for some level of understanding that there is interest and validation in their customer base that they're going to sell that to. And when they are, going to market with this, what is the sales cycle approach that they have? Because is it something that's going to take a long time, a long awareness kind of building momentum phase that they have to go through, which is expensive and takes time? Or do their customers understand it pretty quickly? If, on the other hand, they're trying to connect a bunch of coins together and they want to create a blockchain that is kind of serving the needs of other existing solutions out there that are also using blockchain, like the technical challenges of that. Is that what kind of an undertaking are they really taking on for themselves? And is that something they'll be successful with? We want to diligence that part. So it really becomes a nuance of like, are you building a blockchain technology, which is more of a traditional company and you're going the traditional financing routes, or are you going down the ICO route? And then there, the thresholds change. It's a little bit higher standards like the normal venture investments we do if it's a blockchain technology company. On the other hand, if they're going down the ICO route and they feel they have the momentum, then we'll take a look at it a little earlier.
What's your take on a company that may be reaching $1 million of revenue with their standard software system or traditional software system, and they decide, okay, we're going to go pivot into blockchain, recast our technology, because we see that as a new growth path for us, not only on the technology side, but also on the sale of tokens and doing ICOs. What do you think about companies that pivot? Now, if you're Google and you have to switch the entire thing over, that could be challenging. But if you're $1 million, you're not too far down the path that you can't switch horses. But what's your view of that from a VC point of view as making that is that a fundable deal for you or not?
I mean, yeah, it depends entirely on the context of that, right? If the $1 million is not growing and they feel that they need to pivot into this space because that's where all the growth is, certainly. If on the other hand they're getting good business and it's growing really well, and they're immediately wanting to kind of jump on the hype of the blockchain piece and convert to that, and you have to look at the company, assuming the level of feedback they're getting from the customers. If it's not high and the high levels of feedback and they're kind of just chasing hype, then I'd be very hesitant about that. If on the other hand, if there is genuine kind of market feedback out there that this company is receiving where they're like, hey, we're getting $1 million, we can grow this to like 2, 3 in the next year. But based on everything our customers are telling us and the new customers we've got in the pipeline, if we pivot this or build out a blockchain, pivot may be a strong word. If we expand our product offerings to include a blockchain solution of some type, and that can give us like 10 million in the next 2 years, I mean, of course, why would you not consider that, right? So it's really taking a read and not following hype and trends, but looking at your specific company and the specific implementations of your customers. And that's what intrigues us, right? Like, what's the story behind that?
And what's your take on the token side of it? I've heard some VCs say I'm very interested in companies that can go later raise tokens from the market because that's money I don't have to put in. It's money other people put in to build out that system and grow it. What's your take on the subsequent token sale when they get out to the market?
I think that's the person who said that, or the people who said that to you, I echo their comments that, if you can go and get that, that's certainly a viable route of financing, as long as it doesn't come with you have to time it right, because it's almost like, are we talking about what was good in the past versus what's going to be good in the future? I mean, ICO momentum is not as hot as what it was in December. And at the same time, the regulatory agencies are getting a little curious about the whole situation, or little is probably an understatement. So when you have that kind of a situation brewing in kind of a forward-looking way, like, I agree with those comments. I just say that assuming those parameters stay the same, then absolutely just be wary that is that going to play out for you the same way, given the changes that are happening in such a volatile market of the ICO space.
And in the blockchain space, where do you think the early wins are going to come as far as real applications, real users, real exits? What sectors or applications do you think are on the cutting edge that's going to happen first?
Yeah, it's really going to be the ones that are able to there's two pieces to this, right? Like, you have to look at blockchain ultimately works either as a ledger for a group that has a lot of applications, and they can reduce significantly their cost of managing those applications or that data, especially cross-border, et cetera, by going to that implementation. So who are certain customers like that? Well, of course, international banks are one example. Big multinational corporations that have inventory, et cetera, in different places. That could be one use case. Then the other use cases are governmental organizations that need a lot of data, but you run into a slow sales cycle there. And so they're probably not going to be one of the faster ones to adapt it. And then the other case is consumers, right? There's the whole unbundling movement that's happening in fintech, and that's what's causing a lot of the larger banks to make acquisitions and investments in the fintech space, and demand is coming from the consumer side. So if you're going for public ledger kind of stuff, then that probably is going to happen on the fintech side, and you'll have to develop certain apps there, whether it's payments, whether it's a marketplace that does transactions through a blockchain, that a group like a bank could appreciate and might want to buy that demand and get into that space. On the other hand, if there's an enterprise play that's coming in and supporting the back ends of these companies and providing the blockchain ledgers for either security or cross-border transactions, et cetera, on a B2B basis, then that could be another area. But I certainly do feel that the more likely exits to happen today or going forward for the next 2-3 years in the blockchain space are going to be by fintech institutions relative to other industries. The only exception I'll make to that is the actual companies in the blockchain space that are growing, like Coinbase may buy another exchange. Bittrex could buy something else. So that kind of stuff can happen. And that's a little bit more about how the ICO market continues to grow and how many coins are coming out, and if that becomes a regulated kind of play, and what the pace of that pans out once that comes in.
So, given some of these ICOs have raised so much funding out there, they can actually come in and buy companies and buy developers and buy other aspects of the market that traditional fundraisers in the past have not been able to do. So, how do you think that's going to impact the landscape as well?
I think that adds to the volatility, right? Like just because there's a lot of movement happening in terms of the money, and if someone raises a lot and they raise it without many business fundamentals in place, so they go and start buying assets up, yeah, it's going to create M&A activity. People are going to get bought. There's going to be some really lucky, I don't want to say they're lucky, but opportunistic, I should say, I guess is the better word, people out there who came up with at the right time, at the right place, had the right product that a bigger financed ICO player could scoop up, and those kinds of activities will happen. When it comes to those necessarily building out the core blockchain infrastructure, I think that this will certainly be, it'll be expeditious to that purpose, but it won't be the prime catalyst. It will add some of that, but ultimately that is going to come from products that people use fundamentally that are driven fully by blockchains. And that utilization leads to the mindset of a decentralized application development, infrastructure development, and the adaptation of that by the enterprises as well as consumer behavior. And so this kind of M&A volatility that can happen with that extra money coming in is going to add more fuel to that direction of things. But I don't think it's going to be the one that ultimately shapes it.
Well, very good. Well, in the last minute or two we have, what other topics do you think we should cover around this area?
I guess the only thing I'd say that the way I look at it right now is when it comes to this whole space, it's a very intriguing space, certainly, and there's a lot of activity, and it's really hard to boil down all the moving parts in kind of a quick discussion per se, just because there's so much going on, and there's a lot of blurring of terms where, one thing means this, one thing means that, and people think it means this. I mean, many people still think that tokens are actually currencies, and I don't think they appreciate that they're not really actually currencies. So the thing is that when you have a space like that, the way I look at it is this, by definition of the way a centralized ledger works, there are many applications of it that we can think of, given Bitcoin, given kind of the primary transactional nature of it. Payments and contracting are going to be a big part of that. And so it's going to bleed into this space of fintech, capital markets, et cetera. So far, the development and growth has been primarily fueled by the technologists and those who are visionaries trying to build these newer age blockchains that can either transact very fast or add, extensive feature sets that the original Bitcoin blockchain could not do. And there's been that movement. As we mature a little bit more and more activity and dollars get into the SEC gets involved, you're going to see a push from the capital markets people who have kind of been eyeing from the sides, but haven't been playing as deeply as they would like to, that will start to get in. And once that mix happens, that's when depending on which side you are, you have to be very wary and not wary, that's the wrong word, very aware as that entrepreneur that you can have catalytic activity, but you have to be prepared for it, right? Like if you're a developer, you need to make sure, if you're a tech guy, make sure you understand some of the capital market stuff instead of building the coolest tech. And if you're a capital markets guy, you got to understand this is some pretty sophisticated tech ultimately that's underlying, especially the more advanced blockchains that can do smart contracts, et cetera, or do high frequency kind of trades. Those, you need to be able to have the tech chops, and thinking of it more as a traditional model may not be as easy to navigate. And keeping that balance in mind, I think, is important.
Well, that's great. Well, I appreciate you sharing your comments today. We're at the end of our time. What's the best way for the audience to get back in touch with you?
Sure. So my email is tamim@ocaventures.com if they would like to shoot me one, if they're interested to chat. As I mentioned, to look over the fintech and tech investments here. And so happy to chat and go through opportunities. And it doesn't always have to be about fundraising. Just, myself as well as my partners, we're all very entrepreneur-driven, friendly ecosystem people. And we just want to learn more and be helpful.
Well, that's great. Well, thanks for taking time to share your information about blockchain today, and hope to have you back for a follow-up here very soon, and appreciate the information.
Perfect. Thanks, all. Really appreciate the time.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.